Hi friends, Chris Kelly here, doing my video from the new home office. Don't have all my technology set up, so if it's a little dark and grainy, bear with me. That'll get better over time. Anyway, you know what? I'm going to talk a very little bit this week about the stats. Not a lot of differentiation. A couple things of note, but there's a more important overarching conversation I want to have, at least in brief. So really quick, let's go to the market stats. Sales remain in the sixes, or I should say new listings rather, remain in the sixes, while sold listings are down sub four, which is low. Even pre-pandemic numbers were lower. So in short, there's less sales, but less new listings. And this, I think I said last week, is why inventory numbers show in terms of months actually have gone down. Because again, inventory is a measure of velocity. When we look at the market action report that RMLS puts out every month. So one thing of note, the average and median sales price, it's been kind of hovering, and it's actually come down a bit, both average and median. Median's come down, I don't know, 10 or 15 grand. Average has come down quite a bit. It's come down 45 or 50, which that makes sense. The swings in the average are always bigger than the swings in the median for obvious reasons, which is why I like to look at median. It's a little better representation, in my opinion, of what's going on in the market. Nevertheless, it's come down, and that's the inevitable result. I mean, prices have frankly been buoyed by the lack of inventory. So that's kind of the long and short of it in the market. We're not by any means plummeting. We're just less. So I will tell you personally, our world's been busy. So doesn't mean I'm going to be busy forever, but right now we've been busy, and by right now I mean the last quarter. So and I know other agents that are too. So it's not a freak anomaly with me or with us. So okay, that speaks to the bigger picture, and that's recession versus crash. It drives me bonkers on social media, YouTube in particular. I'm a YouTube watcher, so you see all these guys come on and with the shock and awe, and the markets crash 60%, and it's just so much of it is nonsense. And when you actually watch the video, it's like, well, that depends on where you are, and that depends on what you're looking at. So then the qualifiers start, or they just lie. So I will say this, it really does depend on where you are. Even back, when the recession happened in 2009, well, it was 2009 here. It happened in Portland Metro at a very different time than it happened in Phoenix or other metro markets. So, but it really drives me nutty when these guys that are, their goal is shock and awe and really viewership rather than just telling it the way it is. Now, on the flip side, I know there's people in the industry, real estate or similar, who are a little Pollyanna about things and say, hey, things are fine. Well, things are changing, and that's true. But there is a difference between a recession and a crash. And the word crash is getting used a lot. So I think, here, I'm just trying to put up a little graphic. This is what happens. Usually recessions are, relatively speaking, short, and recoveries, or the positive side of the cycle, is much longer. And you can go back in history. In fact, I'm going to link an excellent article from history.com that talks exactly about this. And it's demonstrable. Here's what happened. Here's what caused it. Here's the timelines. It's always good to combat shock and awe with information. And that's always been my goal. And that is certainly my team's goal. You know what? There are times when it doesn't make sense to do something. And we want to be the first to tell you when that's true. There's also times when it makes sense to do something. Like I always say, the leading variables when it comes to buying real estate for yourself. In other words, for buying a primary residence, buying a home, as opposed to an investment. Investor conversations could be a different conversation, especially as markets capitulate. But when it comes to buying your home, the leading variables always will be what's going on in your life. Does this make good sense based on those circumstances? Now, if you're just going to talk about money and you're just going to talk about the economic component of all of this, well, then what I think is going to happen going forward, and the people that I listen to have said this, the world is very interest rate sensitive. We're aware of it now, and that information, like all information, is available at our fingertips on our mobile computers, otherwise known as a cell phone. So everybody knows what's going on with rates if they capitulate up, if they capitulate down a little bit. So I think what you're going to see is real estate, in particular, happening in spurts. So if we get a rate drop of a point, people will rush into the market because there is a pent-up demand. That isn't going away. I've said that before. That doesn't change just because one variable, GDP, gross domestic product, goes up or goes down for a couple of quarters. I'm not making light of that. I'm just saying it's not the only variable that influences what goes on in the world of money. It's a variable, and it happens to be the one that we look at to define recession. But interestingly, I mean, we have, a couple of months, we have more than a couple of months of GDP going down, but super low unemployment. And there's a lot of money in the economy still. So those are things that are buoying what would otherwise be a bigger impact. But that also makes the point. GDP or just one variable in general is never the only thing. So, the Fed is raising rates, and they're going to likely keep doing that. It is going to have an impact on unemployment, and it is going to have a continued impact in the economy. And eventually, because that's the levers they get to pull, it will also have an impact on inflation. The question mark has always been, and when you go backwards and look at this in time, did they do it too much? Did they do it too fast? Did they do it enough? Those are always the things. Are there other variables that influence it? Like oil embargoes back in the 70s and 80s. I mean, there's so many other things than just one myopic little variable. And the same goes with buying a home. And that's why I always come back to it. Is this the right time? Why? If it is the right time and money's not favorable, the cost of money's not favorable, you know what? There is a time and place for an adjustable or a 3-1 or a 5-1 or a 7-1. And what that means is something that stays fixed for a period of time before it adjusts. A good agent, and more importantly, a good lender, will help you understand these things and make good decisions that are good decisions for you, not good decisions for us or for them. So anyway, I just want you to know that navigating changing markets is just part of life. It's part of business. And I want you to know that we're here to help you do it. And most importantly, I want you to know that we're here to help you do it based on what's best for you and your family. So anyway, I hope you find this of value. That's always my goal. And as I always say, until the next time.